Right, settle in with your morning brew because we're about to unpack the absolute car crash that is Rachel Reeves trying to play puppet master with your compensation money. And trust me, when I say car crash, I mean the kind where you're watching through your fingers wondering how on earth we got here. Picture this: millions of drivers have been systematically overcharged on their car finance deals for years. We're talking about a potential £44 billion scandal that makes PPI look like pocket change. And what does our illustrious Chancellor do? She tries to swoop in like some sort of banking superhero to protect the poor, innocent lenders from having to actually pay back the money they shouldn't have taken in the first place. I mean, you couldn't write this stuff if you tried. Here's what's been happening while you've been busy actually working for a living. From 2007 to 2021, car dealers and brokers were essentially running a secret commission racket that would make a dodgy market trader blush. They could bump up your interest rates whenever they fancied it, pocket the extra cash as commission, and you'd be none the wiser. It's like going to buy a coffee and the barista randomly deciding you look like someone who should pay double, except instead of £3, we're talking thousands of pounds over the life of your car loan. The Financial Conduct Authority finally cottoned on to this absolute madness and banned the practice in 2021. But here's the kicker: they've been dragging their feet like a teenager asked to tidy their room when it comes to sorting out compensation for everyone who got stitched up. Enter stage left, some very angry customers, a few court cases, and suddenly we've got a Court of Appeal ruling that says, hang on a minute, this is all completely illegal. Now, any normal person would think, great, justice served, let's get people their money back. But apparently, we don't live in a world of normal people because Rachel Reeves looked at this situation and thought, you know what this needs? Government interference to protect the banks. I'm sorry, what? When did we start living in a universe where the Chancellor's primary concern is making sure Lloyds and Close brothers don't have to face the consequences of their own dodgy practices? The Supreme Court was supposed to deliver its final verdict on this whole mess, determining whether these commission arrangements were lawful or whether millions of drivers are owed compensation. Simple enough, right? But our Chancellor had other ideas. Reports emerged that she was cooking up contingency plans to potentially override the Supreme Court's decision if it went against the lenders. Because apparently, the separation of powers is just a suggestion when there's £44 billion at stake. Now, I know what you're thinking: surely this is just speculation, surely the Chancellor wouldn't actually try to muscle in on a Supreme Court decision like some sort of financial dictator. Well, think again, because she literally tried to intervene in the case directly. In January, Reeves formally applied to the Supreme Court to let the Treasury have its say in the proceedings, essentially asking for permission to argue that massive compensation payouts would be bad for the economy. The audacity is genuinely breathtaking. But here's where it gets even better: the Supreme Court took one look at this application and basically told the Chancellor to jog on. They rejected her intervention faster than you can say conflict of interest. The judges clearly weren't having any of this government meddling in what should be an independent judicial process. It was such a spectacular rebuff that share prices for the major lenders immediately tanked as reality hit the markets like a brick through a window. So what exactly was Reeves so worried about? Well, according to the Treasury, massive compensation payouts could adversely affect the United Kingdom's reputation as a place to do business. Let that sink in for a moment. The government is more concerned about our reputation with international investors than they are about British consumers getting back money that was essentially stolen from them through misleading practices. It's like being more worried about what the neighbors think than the fact that your house is on fire. The scale of this thing is genuinely mind-boggling. We're potentially looking at compensation that could dwarf the PPI scandal, with estimates suggesting individual drivers could be owed an average of £1,100 each. Martin Lewis has had over 2.5 million people use his free car finance reclaim tool, which gives you some idea of just how widespread this problem is. This isn't some niche issue affecting a few thousand people, this is a systematic failure that's touched millions of families across the country. And let's talk about how this scam actually worked, because it's almost artistically devious in its simplicity. Say you walked into a dealership to buy a car and qualified for a 5% interest rate based on your credit score. Sounds reasonable, right? But under these discretionary commission arrangements, the dealer could look at you and think this person looks like they can afford 8%, bump up your rate, and pocket the 3% difference as extra commission. You'd never know because it was all hidden in the paperwork, disguised as your market rate. It's the financial equivalent of a restaurant charging some customers more for the same meal based on nothing more than how much they think they can get away with. Except instead of overcharging you a tenner for fish and chips, they were potentially adding thousands to the cost of your car over the length of the finance agreement. And they did this millions of times over more than a decade. The really galling part is how brazen some of these operators were about it. One anonymous finance broker told Autocar magazine, and I quote, "I've been doing this work for 38 years and, frankly, we were getting away with murder. We weren't treating customers fairly and were, in effect, charging them to earn us money. At least they're honest about being dishonest, I suppose." But here's where Rachel Reeves' intervention becomes even more questionable. The Treasury's argument is essentially that forcing lenders to pay proper compensation will make car finance more expensive and harder to get for everyone. It's the classic "if we make banks follow the rules, they'll have to pass the costs on to consumers" argument. Which is a bit like saying we shouldn't prosecute burglars because it might make home insurance more expensive. What they're really saying is that the current system, where some customers unknowingly subsidize others through hidden charges, is preferable to a transparent system where everyone pays a fair price. It's the kind of logic that only makes sense if you're more concerned about bank profits than consumer protection. And apparently, that's exactly where our Chancellor's priorities lie. Consumer groups have been absolutely scathing in their response. They've accused the government of putting bank profits before consumer rights and undermining the independence of the judicial system. Some have even suggested this sets a dangerous precedent where the government can simply legislate away court decisions it doesn't like. Imagine if every time a court ruled against the government, they could just pass a law saying, "Actually, no, we're changing the rules retroactively." And let's not forget the human cost here. We're not talking about abstract financial concepts. We're talking about families who've been systematically overcharged for years on one of the biggest purchases they'll ever make after their house. People who've been paying extra for their cars because brokers wanted bigger commission checks. Money that could have gone on holidays, home improvements, their children's education, or just staying in their pockets where it belonged. The Financial Ombudsman Service has already upheld cases where customers were charged 5.5% when they could have gotten 2.49% without the broker's markup. We're talking about people paying more than double the interest rate they should have been offered, purely because someone else wanted to line their pockets. In what universe is the government's response to that systematic overcharging to protect the people doing the overcharging? And here's the thing that really gets me, this isn't some unforeseeable natural disaster that's hit the banking sector. This is the entirely predictable consequence of their own business practices. They created a system that incentivized overcharging customers, they profited from it for years, and now they're shocked that they might have to face the financial consequences. It's like setting fire to your own house and then demanding the fire brigade pay for the damage. Reports suggest she's still considering retrospective legislation that could limit compensation payments regardless of what the courts decide. Think about that for a moment. The government is potentially planning to pass laws that would retroactively change the legal landscape to protect banks from having to pay compensation they might legally owe. It's the kind of move you'd expect from a dodgy dictatorship, not a supposedly democratic government. The really twisted part is how they're trying to frame this as protecting consumers. Reeves has argued that massive compensation payouts could make car finance more expensive and harder to access. But this conveniently ignores the fact that the current system has been making car finance artificially expensive for millions of people through hidden charges. The only people being protected here are the profits of financial institutions. What we're witnessing is essentially a masterclass in how to completely misread both the legal and political situation. Labour has managed to position itself as the defender of banking profits against consumer rights, which is approximately the opposite of what anyone expected from a supposedly progressive government. It's political malpractice of the highest order. The worst part is that this isn't even good economics. Yes, £44 billion is a lot of money, but it's money that should never have been taken from consumers in the first place. Forcing banks to return money they obtained through misleading practices isn't economic vandalism, it's basic justice. And if some banks struggle to pay the compensation they legitimately owe, well, maybe they should have thought about that before running systematic overcharging schemes for over a decade. The FCA has set a deadline of December 2025 to resolve all cases related to this scandal, which gives you some idea of the scale and complexity involved. But every day that passes is another day that people who were wrongfully overcharged are waiting for justice. And the government's response is to try to delay and limit that justice to protect the very institutions that caused the problem in the first place. So here we are, watching the surreal spectacle of a Labour Chancellor trying to shield banks from the consequences of their own dodgy practices while millions of drivers are still waiting for compensation they're legally entitled to. It's like watching someone try to put out a fire with petrol while insisting they're helping. The mind boggles. The Supreme Court is expected to deliver its final judgment later this year, and you can bet the Treasury will be watching nervously to see if their worst fears are realised. If the court upholds the lower court's decision, we could be looking at one of the biggest consumer compensation schemes in British history. And despite all of Rachel Reeves' huffing and puffing, there might not be much she can do about it without completely undermining the rule of law. But here's what you can do right now. If you've had car finance at any point between 2007 and 2021, and you weren't explicitly told about commission arrangements, you might be owed money. Don't wait for the government to sort this mess out. They've already shown their priorities, and they're not with you. Check if you're eligible, make a complaint, and let the system work as it's supposed to. Because if there's one thing this whole debacle has taught us, it's that you can't rely on politicians to protect your interests when there are bank profits at stake. And that, folks, is why Rachel Reeves might just have handed her political opponents the gift that keeps on giving, a perfect example of a Labour government that talks about helping working people while actively trying to prevent them from getting back money that was wrongfully taken from them. You honestly couldn't make it up. Right then, I'll see you tomorrow for another dose of political madness. Until then, keep your receipts and trust no one, especially not politicians who claim to be on your side while protecting the banks that ripped you off.